The broadcast is now starting. All attendees are in listen-only mode.
Good evening, ladies and gentlemen. It's myself, Odwa, here, and we're going to go through uh, the few pointers that I put out for the webinar. However, I just want to wait an additional 5 minutes after 6 so that everyone who has registered may join and attend. If you look carefully, you'll find that in the tab for the webinar, there is a questions tab rather, and that's where we'll interact. Or alternatively, you can raise your hand and I'll unmute you that everyone can hear your question, and then we can have a nice dialogue together. Topics for today is the margin calculator, managing your funds when trading, using the chart patterns, and also more on indicators. First question I'm going to ask is can everyone hear me? If you can, just answer yes on the questions tab. Thank you. Can everyone see my screen as well? We can say yes to both. Okay, that's excellent. It's 6 o'clock at the moment. 4 more minutes until we start the webinar officially. We're just waiting for latecomers to the chance to join. Okay, ladies and gentlemen, let's start with the webinar. Just the house rules once again. If you have any questions, please write them in the questions tab so that I can answer them. And if you want to use an alternative route, you can raise your hand on the application, and then I'll unmute you that everyone can hear your question. If you can't hear or see me, please say so, and then we can assist you. However, we are starting with the webinar right now. So there are 4 topics for today. First topic is how to use the margin calculator provided by gt247.com. Second question, or topic rather, is how do you manage your funds when you are trading? Third question is how do you use the charting patterns? Fourth one is how to then also use indicators. Okay. It's going to be a practical example. We're not going to go through a presentation, so we're going in the live markets. First question I have for everyone is, I hope everyone's familiar with the platform. If not, you can tell me, and then I'll be a bit slower with how I demonstrate how things work on the platform. Okay, so first things first, how do we use the margin calculator? Let me go and get that for you. Okay, I see we have a raised hand. No, not bad. Johan says is not familiar with the platform. That's great. So what I will do is that when I go through, I will explain every single step I go through to assist you with that. I'm not sure. I've never actually been on the receiving end of these webinars. If you can see the webinar and also practice on your platform, that would be very helpful. However, also just keep in mind this actual podcast or webinar rather is being recorded. So after the webinar, I will just let me know and I'll send you the recording. Okay, first things first is the margin calculator. And with the margin calculator, let's interact as well. What would you guys like me to calculate, or what are we trading? Actually, never mind. I'll pick gold for this example. Okay. So we're having a look at gold. Okay. So margin calculator. So we want to determine how much money we want to put in before we go into a trade. Where to find it is the first question, is that you go to our website at gt247.com. Thereafter, you go to downloads. After you've gone to downloads, MT5 margin calculator, you just click there and an Excel spreadsheet will be downloaded to your PC. Open the Excel spreadsheet, and we're currently looking at gold, so that's what we're going to try and calculate. The first thing you need to know about gold is at what price is it currently trading at. Having a look at our screen, we will find that in the market watch, let's say for example, we anticipate that the gold price is going to go up. If that's the case, we are going to look at the ask price, which is currently at $1,345.10 an ounce. So that's what we're going to put in the margin calculator, 1345.1. 1345.1. So first thing, we search for gold. put in the number 1345.1. Then we go back, having a look at how much money I have in my account. At the moment, I have 400, or let's say rounded off, say 500,000 in my account. Also, do not be alarmed, I'm not that rich, it's just a demo account. So let's put in 500,000. Using a 2% rule, okay, let's use 100,000 to make it easy. Using a 2% rule of the 100,000, the maximum amount I'm willing to expose per margin will be then 2%, 2,000 rands. Then what we're going to do is that where it says here, the amount of margin I know the margin I want, rather, you're going to put there the number, which was 2,000 rands. After you've pressed enter, it will tell you can afford 4 rands per point. Or let's say if I was very ambitious and I said I want to go for 10 rands a point, if you put that there in the second row where it says how many contracts do I want and or rands per point, you will then put there 10, and if you press enter, it will tell you for that particular amount you have to avail at least 4,990. So we're going to do both examples. First with the 4 rands a point to see if the margin is going to equate to 2,000 rands. Okay. In order to place a trade, what you'll do is that there are a number of ways. You can first go to new order on the top of the screen and the trade ticket will come up. Second way to go about it, you can go to the market watch, double click, similar thing will occur. Or you can go to the market watch once more, right click, and then go to new order. And then it will show you the same trade ticket. So there's more than one way to skin a cat with MT5. Okay. So just keep a note, our current margin exposed. Unfortunately, I couldn't close the trades I had open because the markets have closed. So I'm unable to trade them. So whatever we're going to add now is going to be X minus 19,619.31. Starting off with 4 rands a point, meaning a volume of 4. And we said we're going to buy 21 around $2,000. I mean 2,000 rands rather. Okay, and that is your trade. If you want to see the exposure, you can go this side. What's gold? Okay, the exposure doesn't really, it's not accurate. It means something totally different. I can go into that if you want to know, but it's not that important. So that was an example. I'm going to close the trade. Then we're going to do 10 rands a point, and that should equate to nearly 5,000 rands. Margin required, meaning from 19,000 it should go close to 24,000. And there we go. And that, ladies and gentlemen, is how you calculate your margin. Margin is the amount you need to have in free cash in order to participate in a trade. Okay. There aren't any questions. I'm going to move on. And so that's where it goes to how do you use this particular margin calculator. However, I find that in order to use the margin calculator effectively, you need to have at least 2 things in play. Number one, you have to understand where your stop loss is going to be. Once you understand where your stop loss is going to be, you can calculate how much risk you want in that particular trade. So For example, on our 100,000 Rand example we started off with, if 2% is the maximum we're willing to lose in each and every trade, what we have to calculate before we enter a trade is the difference between the entry price and the stop loss. Okay. And in order to determine that, okay, let's say for this particular trade again, gold, we're going to go long. For a long on gold, we're going 10 rands a point. Current price is $1,344.90, or 45 rather. And let's say we want the stop loss to be $10 away. So we're going to put there 1335. Correct? That means in terms of points, that's 100 points away from your entry. And we're only willing to lose 2,000 rands, meaning that in order to lose 2,000 rands and your stop loss being 100 points away, the volume we can go to is 20. Do you need any explanation of how I got to that? Meaning that at a volume of 20, if it moves 100 points against you, you will lose $2,000. 2,000 rands. So that is your risk for this particular trade. And once we've determined the risk, we know that our volume is going to be 20. We go back to our margin calculator, saying that we are using 20 points, 20 rands per points. That means I have to have at least 10,000 rands available, or 9,980 rands and 64 cents available. And then we will place our trade. Okay. So firstly, once you've made a calculation of determined where your stop loss is going to be, and you've also understand what the risk is you are willing to lose, you can then calculate what the volume should be. I'm anticipating everyone has a calculator, where now I'll tell you what it is. So in order to determine, the formula to determine everything, I'm not sure how easy you guys, how well you guys know math. The equation is volume equals risk divided by points. Once again, the equation is the volume you will calculate is your risk, meaning the amount of rands you are willing to lose, divided by the points it is away from your stop loss. That is how you determine the volume that you need to get into a particular trade. Okay. And now let's say you go to a new computer and you are unable to see you don't have the ability to get the margin calculator. There is another way to calculate this particular how much margin is required. I'm not sure if you guys have a calculator. Never mind, I will show it here. But if you can also bring out your calculators at home. let's say just for the ease of calculation, we're going to use 1 rand a point, meaning that for one contract you need at least 500 rands. What you do, you right click on gold, go to specification, and as you can see, the specification says that the gearing rather on this particular instrument is at 3.71%, meaning that you'll take the current share price, which is 1345.8, then you will times that by 0.0371. There you go. That's how that was calculated. Also, if you noted, I did not put a comma rather. I put an extra 0 after 1345. The reason for doing that is how the system calculates everything is that it's at a point basis. So on gold, for example, the point is calculated 1 decimal point after the comma. One number after the decimal point. If I'm making sense, I'm not too sure. So that's how you calculate everything. So for example, we're going to calculate the exact same thing for platinum. Platinum is currently at 9385. And we're going to go to specification. And platinum is at 0.1195. Okay, that's the calculation I have. Now let's see how the exposure is according to the margin calculator. And as you can see, it's in a similar ballpark. It will not be 100% accurate every single time. Just gives you a ballpark figure. Okay. Okay, now that is the straight stuff. Now what we want to know is how do we use charting patterns and the indicators, meaning how do we know how to place a trade. What I want us to do today is that we want to place trades that actually make a profit before the end of this particular webinar. And how we're going to do that, we're going to move the time frame from an hour time frame to a 15-minute time frame. Then what we're going to do, so we did that here on the top bar, on the toolbar, just went from 1H to M15. And what we're going to do is that we're going to use charting patterns. Where to find these particular charting patterns? You would go to our website again, and on our website, if you go to resources and then click on education, you'll find that we have done a few blog posts on a few topics. A number of these topics is the Forex hack. And as you can see here, it explains what a double top and double bottom is, where you can determine where your entry price and target price should be. Another one we have here is the triangles. We have an ascending and descending triangle. This also lets you know when your entry price and your target price should be. And last but not least, we have the head and shoulders pattern, where this also determines where your entry price and target price should be. Okay. Next one is more chart patterns. This is an inverse head and shoulders chart pattern. Next is the channel chart pattern. And then thirdly is the rounding bottom chart pattern. Just rushing through all of these. If you want more information, you can go to our website and it will indicate, you'll be able to see how everything works. And then some candlestick patterns. Moving averages. Okay, I'm not going to go into all that. It is an easy read and you can find it on our website. What I'm going to do, however, is go through a practical example on how to do all of this. First things first is, where do I find all these indicators and chart? Oh, well, indicators is the only thing you can find. Chart patterns, you have to find them yourself by analyzing the charts. A favorite of mine is the traditional MACD. And way to find this is that you go to the market here at the bottom and in the toolbox. And then you'll just type in traditional MACD, and it's free of charge. Just click on it. Then it'll ask if you want to download it. You click the download and it will appear in your navigator. Your navigator is going to appear under a subsection called market. As you can see, I've already purchased this, so it's already here. If you grab it and move it across to the chart that you want to add the indicator to, it will show up. What I like to do is change here where it says signal. I like to change the color to a more seeable, if that's a word, color. So yellow is very hard to see, so I like to use purple instead. The MACD is traditionally used to determine turning points in a instrument. So for example, if you go back in time, you'll see here at this point the trend was going down. When this occurred, it showed that the share price was going to go, the share price was going to go up. So that was a turning point from a downward trend. And that's where you would have you would have bought it after it completed. And then again here, there's another turning point here at the bottom. There. And there was another turning point. And as you can see, the darker the line, the stronger the indicator. So for example, right now, we should be buying, according to the indicator, we should be buying this gold, which I will do right away. Okay. However, it's not the only indicator. Another one, if you can see in this particular charting pattern, there are moving averages in it. There's your 12-day and your 26-day moving average. And as I said, I like to change it from yellow to purple so that I can see it. And the purpose for me seeing it is that it also indicates whether I should buy or sell. Every time the blue line crosses the purple line, that's an indication as well of a change in direction. So for example here, the blue line went above the purple line, which was an indication rather to buy. And then here, the blue line went below the purple line, which was an indication to sell. So if you're using this particular indicator to place your trades, it is a nice indicator to tell you when to buy into a particular instrument and when to get out of it. However, this needs you to be more hands-on with your trades because it doesn't give you any signals and you can't predetermine where you should put your stop loss and or take profit. So again here, the blue line went above the purple line, and that's where you would have bought. And here, when the blue line went below the purple line, that's when you would have gotten out of the trade. If you are a brave individual, what you can also do then, as soon as you get off the trade, you can then go into the opposite direction. However, that's totally up to you. So now with this particular instrument, yes, the convergence divergence says that it's going to make a reversal. However, what we're also seeing that the blue line hasn't yet crossed the purple line. So there's a saying that says if one person says you're ugly, you should smack that person. However, if two people says you're ugly, you should smack the second person as well. However, if 10 people say you're ugly, it's time to buy a mirror. So that's the same analogy goes into using indicators. Is if one of the indicators says it's a buy, however all the rest disagree, it may not be correct. However, if more than one thing agrees with your sentiment, or if more than one indicator agrees with the buy or sell indication, that's usually an indication to go into that particular trade. However, also what you don't want to do is that you don't want to have too many indicators in your arsenal, because what could happen is that if you have 10 indicators, 5 says buy, 5 says sell. However, the criteria for the 5 that are saying you must sell do not align with the criteria for the 5 that says you must buy. So that's something you must also keep in mind. Okay. So that's the traditional MACD, and that's how that particular indicator works. The reason for the histograms, the reason you would need the histograms is in order to be able to draw these lines, these convergence divergence lines. However, with this particular indicator, it does that for you, which is an awesome indicator. I actually really like this one. Okay, I'm going to get rid of it. Sorry, in order to get rid of it, just right click on the chart, go to indicator list, and then click on the indicator. and then press delete. That's how you get rid of that. Another indicator is a moving average. So you go to indicators, trend indicators, then you go to your moving average. Same applies, drag it onto the screen. We're going to put in a 200-day moving average, and I'm going to make it exponential. I'm going to keep it blue. Then I'm going to say OK. There it is. Then I want to add another moving average indicator. However, this time it's going to be a 50-day moving average. Exponential again, and I'm going to change the color to let's say indigo. Okay. Now this particular indicator is telling me that I should short this instrument. Okay. Oh, sorry. So the use of these two indicators together rather, is that if the purple line crosses below the blue line, it is called a death cross, which is an indication to sell that particular instrument. As you see here. And if it goes above the line, it's usually an indication to buy the instrument. Okay. There are many variants of that's how you would use that. What am I thinking about? Sorry. Am I still with everyone? I'm okay. Okay, thanks, Wayne. Okay, so now this particular indicator says that you should sell. Okay, let's go to something else. So one says no. Let's see another indicator. Let's look at Bollinger Bands. This is another one that I like to use. Just keep everything as is. The way this works, I like to use it on a short time frame. Reason is once the band contracts, as you can see here. So the Bollinger. Well, let me remove the other line. Sorry. So again, what we're going to do, we go to indicator list, get rid of the indicators. We're looking at the Bollinger Band. When it squeezes together or contracts, you find that its pressure is building up, as they like to say, and then what happens is it will explode in one direction. So as you can see here, contracted, then exploded barely in one direction, then it contracted again here, then exploded in an upwards direction. Here again, it did contract. Then it exploded tremendously in another direction. Here's another place where it did contract. Then it exploded downwards. And then it also contracted here again, and then exploded downwards again. And as you can see now, it seems like it's starting to contract. To contract once more. So now once you see it has contracted, what I liked to do, I don't think this is industry practice, is that at the top and the bottom of that construction, I would put support and resistance lines and wait for it to break above that construction, so that I know when it's exploded, quote unquote. So this right now is for this area. So what we did here, we saw that it was bouncing up and down in that level. And then as soon as it broke above, it actually came back in. So that was a fake breakout. Second breakout was this long candlestick. This is where now you have to determine your own risk reward ratio. So in my opinion, this is a risk reward ratio should be ranging in order to make more than to cover the costs rather of going into the trades for the commission, etc. What you would do is that your risk reward ratio would be 1 is to 1.5. I don't think anything below 1.5 is viable, because if you are running a business and you are selling bread, for example, you're not going to buy the bread for 10 rands and sell it again for 10 rands. So 1 to 1 is not viable. And you want to sell it for, let's say, 15 rands, where the 5 rand covers the petrol cost, etc., etc. So 1 to 1.5, and I would say maximum is 1 to 3, because more than 3 is being very greedy. Even 3 rather is being very greedy. Okay, I've got a few questions. Let's answer those. Yes, Johan, sorry. You can add a stop loss and take profit to the trade once you've opened it, and I'll show you how to do that. Okay, Francis is asking, if an indicator is for sale, does that mean that it's of value, or more value rather than an indicator that's not for sale? Excuse me. No. The simple answer, so I'm going to start with Francis. The simple answer is no, it does not mean that it has more value because they have added a price to it. The thing is with the market is that anyone can create their own indicator. Or let's say there was an indicator not available on Metatrader, and then those individuals decided to build that indicator. Now, because it's not on Metatrader, it only makes sense to them to sell it to anyone who wants it. So it does not mean that it's of more value. The criteria for it, it's also on your trading style. For example, if you are a F1 racer, you're not going to go to a F1 race with a Toyota Taz. Or if you do a lot of traveling in the inner cities like Johannesburg, you're going to want to use a more fuel efficient car than a petrol guzzling car, using a car analogy. So it's all about your trading strategy and your trading style that you would use certain instruments and indicators. For example, for me, what I've found out is that using Bollinger Bands is not as profitable on a long time frame where as it is on a shorter time frame. That's why I love to use Bollinger Bands on a short time frame instead of a long time frame. Moving averages, as you saw now, I like to use them rather in a long time frame, where it's indicating what the trend is going to be for that particular instrument. And then I know that if I'm scalping for the day, I'm going to be trying to go as long as often as possible. If the trend is a long trend. Okay, I see someone has their hands up. We're going to unmute you, Francis. Did I answer your question, or you want to say something else, Francis?
Yeah, I think I have a good indication. That's okay for me now. Thanks.
Okay, no problem. Thank you. Ha! You are a legend. Thank you. Thank you very much for indicating that. My laptop is getting flat. Okay. So for that, also depending on your risk reward ratio, especially when you're scalping. So scalping is more about being in front of your computer, making sure that you're seeing every single instrument, every tick that goes up or down or sideways, and then getting involved with that. So what I like to do is, as I said, nothing more than 1 to 5, or nothing less than 1 to 1.5, and nothing more than 1 to 3 in terms of risk reward ratio. So what I do is that once I found the range in which the Bollinger Band is in, I look at how many points that is. So that is 35 points, give or take. So what I will do is that I would double it and say I want 70 points from this. And there you go. Luckily this time it was exactly 70 points. So that would be my my top take profit. However, I would watch it if it was to do a sharp turn or do a reversal before it got to that take profit. Or if the Bollinger Band started to contract again. So if you have a look here, that's when the Bollinger Band started to contract. Here at the bottom here. At the bottom it started to contract and on top. Also, what you want to have a look at is that with Bollinger Bands is that as soon as it's the candlesticks, the Bollinger Band rather, is not going on the candlestick, that's when it also turns direction. Another place is here on top. Let's just do the top one again. This one here. So in this area, that's where the Bollinger Band contracted again, and then we're going to use the same theory. Around 30 points. Want to see 60 points, 1 to 2. That's where my take profit would be. And my stop loss in this instance will be just outside the bottom line or resistance level. Sorry, the top line in this case. So if I'm going short, that's where I'll put my stop loss just above it. If I was going long, I'll put it just below. Okay, and yeah, that's how that works. So that's not a pattern, that's just using indicators to trade. Now if I was to do the opposite and use patterns, let me find some patterns for you guys. Okay. Okay. So on the same time frame, we're using. So the first pattern I see off the cuff is what do they call this? A channel. So what I would do is go here to this E, and then I'll draw a channel. What this indicates is that the instrument will be trading within that channel. So at the moment here, we're still seeing that it could potentially go up and reach the top of the channel and then turn from there. There we go. Oh, sorry, the gentleman, Johan, I think, asked how do you add a stop loss? So what you can do is that you can add it by just going to the trade itself, right-clicking on it, and then say modify and or delete, and then you can add your stop loss. Let's say, for example, if you do a point system stop loss, you say, because I'm already going 10 rands a point, and for this particular trade, I don't want to lose more than 200 rands, I'm going to put 20 points as my stop loss. Or if you know exactly where you want to put your stop loss, you can say, okay, for this particular trade, I want my stop loss to be at 1,340 to use a round number. You can put the number there. Then when you click modify, stop loss will be implemented. Okay. And because with Metatrader, the nice thing about it is that you can actually move the stop loss up or down. Okay. I see we have another question. Oh, actually, it's a raised hand. Yes, Francis?
There is no question from me. Is it maybe the previous?
Okay, I removed this. Sorry.
Okay.
Okay, awesome. Let me try and add some charting patterns. Let's try and find. Okay. Yeah, let's try and find. So that's a channel, but it hasn't kicked through, so there's no particular trade for that. Nothing. Oh, sorry, doing 50 minutes. Oh, there we go. This is actually a perfect timing. I didn't. If no one said I gave you anything, this is something to look at. So if you take your trend line, and then we're going to draw some there, trend line there, and then we're going to put resistance line around there. What you can see that this is a ascending triangle. And what's happened at the moment is that it's broken through, and this is on an hour chart. As it's broken through, what is most likely to happen is that, as you can see with the green candlestick, it could go up and retest this line and then continue to go down. However, this is an indication that it's going to go, it's a short position. So now if I draw, so how you use this particular, what do they call it, setup, you draw a line from where it first bounced. So you see the bottom of the trend lines at the bottom. Okay, let me use the mouse, not my finger. So here's the bottom of this triangle is here, and it reached the top there, and then it came back down. So that's from here to here. That's where I want to take the trend line. So what you'll do is you draw a straight line from the top to this point where the trend line is, rather, and then you want to take that same distance, and then I'm going to move it where you would have entered. And that is where you're anticipating your take profit is going to be for this particular trade. However, with experience, what I tend to do is whatever the current price is. So, for example, it's currently the take profit would be at 1.2290. I like to move it just 5 to 10 points inwards, meaning that I would move my take profit to 1.225, and then my stop loss, I'll put it just above the current one, which is at 1.2395. So I'll put it just 1 point above it, which is 1.24. 5 points in. 5 points up, and then at the bottom also 5 points up. So let's place this trade. This is a Euro USD trade. So short position, we want to keep it at 10. Say the stop loss is going to be at 1.24. Take profit is at 1.2295. Then we saw that would be my trade for that. If you have a look at our initial trade that we did when we started the webinar, was the gold long, and that was based strictly on the MACD setup. And I've already made $110. It's not really much. It's only moved 11 points in my favor, or 12 points rather. However, that is still money in the bank. It's all about cashing in as often as possible. There's never something wrong with profit. Do not try to become a millionaire in one trade. That is an investing game, not a trading game. So this was just how to show you how to I found a pattern and I used it and I took advantage. Unfortunately, this is on an hour chart, so this could take a couple of hours before you can realize its full profit, or before it reaches its full profit. Okay. Just to explain channels, I'm going to go here. So this is a channel formation that formed, or completed rather. So this particular instrument was in an upward trend from the 6th of this month up until the 11th. Then on the 11th, it broke out of the channel, and then, as I said, it usually breaks, comes and retests the channel, and then continues to go down. How to use what do they call this? How to use channels is that once it breaks, what you do is that you take a straight line down from the peak of the channel to the bottom of the channel, which is 58 points. Let's do that. So the top channel to the bottom, put a line down, take that exact same line, put it here. And as you can see, this trade was successful. Your stop loss, where you would put it, is just above where it peaked previously. So you'd put the stop loss where it currently is, and your take profit would have been at 1.2314. And that's how you use channels. And can you use channels even when it turns again? Yes, you can. So you have a look here. Now that's the downward channel. And same thing again. Take a line from the top to the bottom. As soon as it broke out, you put the line up there. Stop loss would be your last peak. So that was where your stop loss would be. It broke out, take profit would be there. Took quite some time, but it eventually got there. So that's how you use channels. And I did triangles with you today. So if I don't want to say I gave you a trade idea, but if you feel lucky, this looks like a nice trade that is here to short the Euro USD on an hourly time frame. I see that the time is 7, but I'm more than happy to go a bit longer, 30 minutes longer. I see we also have a few questions. I'd like this to be our questions round. Okay. Okay. Johan's asking, what is the difference between an hour time frame and a 15-minute time frame, and how does that affect your realization of profit? It's the speed in which it happens, and also at this current point in time, uh, it also depends. Firstly, it's the speed in which it happens. Number one. Number two is uh, on a shorter time frame, you can get into many more trades within a day, whereas on a long time frame, as soon as this breaks, for example, on this hour chart, it could take 3 days until it reaches my desired take profit, which is why long time frames are more, as I said, is more for your investment. So your daily time, if you are doing investments with our sister company, Easy Equities, what you would do is that you would use a daily time frame and then determine the trend of that particular share and or stock. On a shorter time frame, you will get in and out on shorter periods and shorter bursts, and you can leverage it more because the movement you're looking for is not as big as you would be looking for it in a daily time frame. However, because it's such a short time frame, it requires you to be in front of your computer or have access to your trading account at all times and looking. It, in my opinion, it sucks up more of your time if you're looking at a short time frame. Whereas in a long time frame, you can say, okay, this says I must go short. It just broke out, but I needed to confirm, so I'm gonna wait another hour on this hour time frame for it to confirm before I go into the trade. Where if it was a 15-minute time frame, you would just wait 15 minutes for it to confirm. Then you know that you want to go in and place the trade and so on and so forth. So that's it's all about how much free time you have and how much you can access it, etc., etc. Any other questions? This is the question round. Thank you, Yvonne. Excellent feedback. If there aren't any questions, I would like, so I'm going to have another webinar in 2 weeks' time, and I'd like to know what other questions you guys have about the web, the platform, trading itself, managing your risk. I feel that I didn't go too deep into managing your risk. If you want me to do this again next week, then we can do that. Generic, okay. Okay. Francis is asking, what are the trading hours? With our platform, we're looking to go 24 hours soon. However, at the current moment, it's from 2 a.m. to 11 p.m. Okay. For your stocks or CFDs, it is from 5 past 9 to 22:05. So 5 past 9 in the morning to 22:05 in the evening. If you forget, which I always do still, what you can do, whatever instrument you're looking to trade, just go to it. So let's say, for example, gold, you go to specification again, and there you go. Just keep in mind that this is GMT, so it's 2 hours behind. So for gold, you can only trade from starting from 5 past 2 a.m. and it will close at 10. Yeah, that's 10 past 10. 10 past 10. So at 10 past 10, my trade will close out of the gold trade. Oh, look at that. Our short is also making money. Hey, I actually know how to trade. Okay, so let's say, for example, you want to look at another one, Naspers. Go to Naspers, scroll down. As I said, 5 past 9 and 22:5 rather, which is 4:40 or 16:40 if anyone went to the army. Okay. Thank you, Nomta. I will say, okay, I will not remember. I mean, sorry. If everyone wants to receive this webinar, please just state that you want to receive the webinar. Oh, this whole time I didn't. Okay. Just say yes, and then I'll send you personally the webinar. Thank you, Wayne. If there's any other questions, this is the time. Okay. Tana's asking my thoughts on the S&P 500. S&P 500 is incredibly volatile, and especially in these current pressing times where we have a president that is as predictable as a weather without the weather forecast, which is Donald Trump. It's kind of, I would not say hold it for a long period, because anything can happen as soon as he wakes up and he fires a tweet, and then that could change the whole trajectory of that particular trade. However, in my opinion, I think that the American market in the long term I feel that it's still going to go up. It has cut back a bit at the moment, but it is earnings season, and in the current earnings season, we've seen a lot of growth from companies. For example, it was banks last week and this week, and that got the. Let me show it actually. I feel like I'm mumbling. Okay. Okay. So this is a daily chart. It had a nice run since last year, and then it drew back. But this is a classic. Oh, this is actually something I didn't talk to you guys about, but I think it's a nice tool to use as well. Okay, I'm going to take it from here. Something called Fibonacci lines, and I want to take it from here. Okay. So with the Fibonacci lines, we can see it had a strong run. What you do is that you put it on the peak and the bottom of its run, and the Fibonacci line, what it basically tells you, it gives you an indication of where it could possibly bounce from that particular instrument. Looking at the daily chart, as you can see, it drew back into the fib of 38.2, and it did that twice, and now it seems like it's gone above 61.8. If we zoom in a bit more, we can see that it's bounced off. So in the long term, just to answer your question, not to take too much time, in the long term, I think that it is still going to go up, the American markets, that is. However, at the moment, it's still suffering. The bounce back started last week, and that's when your banks started to release their numbers. And we also had this week, I think on Tuesday, we had the Netflix released their results, which was up by, in one day, the share price moved by 9 point something percent. Uh, However, this is not the SM. I mean, those companies do not clearly affect the S&P as they do. So tech companies are correlated with the Nasdaq. So for the Nasdaq, what you will want to do is that it's very tech heavy. So with the Nasdaq, if there's a lot of good news or in the tech industry, you would want to trade the Nasdaq. With the S&P, it's a bit mixed, and there's a lot of companies, which hence the 500. So it's hard to determine based on uh, sector performance which side is going to go. But giving it this a quick look, I haven't given it much look, much thought rather. You can see that it's bouncing off the top. So at the moment, I would assume that it's going to bounce off uh, that trend line. However, if it goes above it, then it's a great position to go long. But this is on a daily chart. That's if you're investing. However, if we look at a 4-hour chart, on a 4-hour chart, you can see a channel that it's currently just broken out of. So maybe for today, I would go short on it. I'm not sure when you say what's my view on the S&P. Am I thinking short term to trade in and out, or long term to trade in and out? Right now, I would short this. Okay. Yuan is the profits. So with our platform, everything is in rands, nothing is in dollars. The reason I was saying dollars earlier on is just to be accurate with regards to how I express the price of gold, because gold is denominated in gold. I mean in dollars rather. However, everything you trade here is in rands. So if it goes up 10 points in your favor and you're in 1 rands per point, you'll make 10 rands that trade. If you're in 10 rands per point, you'll make 100 rand in that trade. Johan is asking again, which one? Okay. To answer your question, Johan, where can one find a good list of earning reports for S&P companies? First of all, you have to know which companies are in the S&P. I hate to say this question. I love to help my clients. Google's the place to go. First, you have to know which companies are in the S&P 500. Once you get that, then I can show you where to find the earning results. We got our friendlyinvesting.com. Then we have, what else is there? So many. Okay, so we're just gonna stay offshore at the moment. So I'm gonna stick to. I don't want to use TradingView. Yeah. And then so investing.com and TradingView are good sites to go to. So with investing.com, you go to news, go to economic calendar, then you go to earnings. And then this is telling you which companies. So for example, for today alone, so a number of things, a lot of companies are in America. So for today alone, these are the companies that released results. The ones that have numbers already means that they've already released those results. You would go through the whole list and see companies that you recognize. Unilever is going to release results today. Another good company. Then we have this. Okay, this is for something else. This is when you're doing your. So I love TradingView when you want to do more quantitative understanding of what's happening in the markets. You come here, uh, and then you can look at which ones are the top gainers, etc. Which ones are reaching all-time highs, all-time lows. You can do a stock screener, and what this basically does for you is that you can say based on I want companies that are based on the evaluation. I want which companies are the best of the game at the moment, which companies have the best income statement, balance sheet, and you can put it on a daily frame or so on and so forth. Can also change. I don't think South Africa's here, that's why I don't like it. Yeah, South Africa isn't here. So this is more for offshore investing. But well-known place to go to look for this stuff is Bloomberg. By far the best place to go to find any news. So, for example, in Africa, you can go to stocks, and then in stocks you can say earnings calendar. And then it gives you the exact same list we saw elsewhere on investing.com. Okay, that's not where you go. Sorry about that. I would say just play around with these three sites. I don't usually use Bloomberg to search for everything. I use the Bloomberg terminal. However, if you play around with the sites, you will see which one has some are very good at specific tasks and giving specific information and so on. That's what you would like to do yourself. So once you play around, you will see which one suits your needs, and then you can use that going forward. So Johan, no, you don't need dollars to trade. No, we don't have specific US companies on our platform, unfortunately. So using our platform, you can trade the indices, meaning the countries, yeah, countries index. Bloomberg terminal is very expensive. Sorry, I even mentioned it. It's something traders use. I don't think you would be able to get your access to it. So you can't trade specific US companies at the moment using our platform, but you can trade this individual indices. Okay. Okay, if there aren't any more questions, okay, last round of questions. At 7:23, if there aren't any questions, we are going to end the seminar. I mean the webinar rather. Okay, just a favor from you guys. If you do have any questions for the next seminar, please let me know now that I can prepare, or I'll just put up something that I think that everyone would like to know more about. Thank you, Martus. Shefi, yes, you raised your hand. Do you have any questions? Shefi? Yes, Morgan, I'll send everyone, what do they call this, the link. Once we've loaded it on YouTube, we usually load like the previous one that we had is on YouTube on our channel. You can find it there. I'll load it on YouTube and I'll send, but you guys, because you took the time to come, I'll send these to you personally. And then what you can do for me, if you're a legend, take down my email address, and then if you have any personal question that you want to ask, I'll just write it down and answer all. And that's all the time we have for today. Thank you everyone for taking the time out of your evening to join me for this webinar. Hope it was informative, and I hope I could have helped you guys better your trading game. I know it's a step-by-step process, and I'm always available to assist anyone. May you guys enjoy the rest of your evening, and tomorrow may you have a profitable day. Thank you.